Hi there, this is Dusty Wetton, tax attorney of Tax Debt Services. Today's video is about the streamlined payment plan between $25,000 and $50,000 in tax debt. Alright, if you've been following us for a while, we made a previous video if you had tax debt between $0 and $25,000 that was about the streamlined payment plan. This video is about if you owe the next bracket up between $25,000 and $50,000 in tax debt. Now, if you're in this ballpark range, the IRS does allow payment plans called streamlined payment plans to pay off your tax debt. When I use the word streamline, what that means to the IRS is they're not going to ask about assets or income or expenses. They're going to allow you to pay the tax debt off through a monthly payment plan based on 72 months, as long as that fits within the collection period. Remember, tax debt has a collection period. They call it a CSED, or collection statute expiration date. And what that means is eventually it's going to expire. If it expires within 72 months, then you can't pay it off longer. It has to be paid sooner. However, most of the time, 72 months is available, and that's what the streamline's for. To first apply for a streamlined payment plan in this bracket, you have to be compliant. We've talked about compliance in a lot of videos as well, but just to remind you, it is the last 6 years of tax returns that are required to be filed need to be filed. So that's the very first step, is to make sure you are compliant. Once compliance is checked off, then calling the IRS or going online to enter a streamlined payment plan is the next step. Now, back in 2011, the IRS had the Fresh Start Initiative, which opened this up for people that have tax debt between $25,000 and $50,000 to go into a streamlined payment plan. And the one caveat to that is how they pay it off. It either has to be direct debited from their bank account or through a payroll deduction, meaning that you contact your payroll department to have it deducted from your pay. It is not a garnishment because you agreed to do it. It's just a way that they automate the payment plan. Whereas if you owed between 0 and 25, you can mail that in or pay online or do something else. But between 25 and 50, you are more obligated to have the IRS take the money through something that you agreed to. We talked about the 72 months and the collection statute expiration date. That is applicable here as well. There is a different program the IRS opened up for a period of time that allowed 84 months, but strictly speaking, we're talking about the 25 to 50 standard streamlined payment plan, and that is the 72-month plan. If you are on this payment plan for over 3 months, you are eligible to have any tax liens withdrawn, and you are also protected from any new tax liens being filed. And that's very important for anyone applying for credit, a home, a car, that a tax lien will not stand in your way or can be removed if you're trying to plan your way out of that. How you do this, again, we talked about this a second ago, but you can go online to set this up. You can do it over the phone by calling customer service or the collections unit at the IRS. You can try to mail it in. It's probably the slowest method. But if you're not sure how to do it, or you're not sure even if this is the best plan for you, again, I think talking to a tax professional and asking the right questions, even if it's just advice, you don't hire them to do something, ask the right questions. If you're hitting a wall and it's just not working out, maybe you need to hire somebody to help you out instead. Give us a call, 800-822-4122, or go to our website, taxdebtservices.com. We're here to help. Thanks.